Hello everyone, we are group number 1. This is a video presentation about the audit plan for Health Recon Connect Private Limited. So, first we want to know the meaning of audit planning. Audit planning is when an auditor formulates an overall audit strategy which is translated into a detailed audit plan for audit staff to follow. The planning process is covered by SLA US 300 Planning and Audit of Financial Statements. So, an effective and efficient audit is based on the proper planning procedures. This is the outline we will cover in the upcoming slides. Our engagement team is this. The engagement partner is Mr. Rashida Hira. The engagement manager is Ms. Hansini Buddhika. The engagement supervisor is Mr. Roshita Mekamar. The audit senior is Chamudi Dahanayaka, and all others are audit associates. Next, Rashida will explain the introduction of the company.
Today we will be presenting on all of the Health Connect Private Limited, its nature of the business, revenue management circles and investment portfolio. Our goal is to provide the insight into how the company operates and its contribute to the healthcare financial services. Firstly, I will discuss the nature of the company. Health Connect Private Limited is a subsidiary of the Health Connect SG Holding Pty Ltd based on the Singapore. The company's sole customer is its parent's company, for which it provides the outsourced administration services. To generate revenue, Health Connect applies as a 1.12% margin to the total cost of the services provided to the parent company. Next, I will walk you through the organization structure of the Health Connect Group. This structure is outline the ownership and relationship between the different entities within the group. At the center of the structure is Health HRC SD Holding Pty Ltd, which serves as the main holding company. It is jointly owned by two entities, Shotri Holding Pty Ltd and Townwood Holding Pty Ltd, with each holding 50% ownership. These two entities are in turn fully owned by the FN67 and FN69 respectively. Moving further down for the structure, HRG SD Holding Pty Ltd has 97% ownership of the two key subsidiaries, Health Connect LLC and HRC Technology Solution LLC. The remaining 3% of the each is owned by Breed Walker. Additionally, HRC SD Holding Pty as a fully owned of Health Connect Private Limited, giving it full control over its operation. Another key entity of the structure is HRC Technology Solution Holding Pty Ltd, which is 50% owned by HRC SD Holding Pty Ltd. This is company fully owns HRC Lab Private Limited, a subsidiary of operating under its management. The company operates with a workforce of 950 employees, managing both day and night shift. The structure it has 100 ordinary chairs and 2 directors, and its secretary company is Volex Consultant Private Limited. The main shareholder is Health Connect SG Holding Pty Ltd in the Singapore, ensuring financial stability and strategic decision. Revenue Management Circle. The core function of Health Connect Private Limited is a structured revenue management process that ensure efficient and accurate financial operation for the healthcare provider. The company follows as a 5-step of revenue management circles. The first one is pre-billing. Pre-billing is a save the time and money to by verifying the patient's insurance coverage, referrals, and credential upfront. The second one is billing. Ensure that all the claims are submitted accurately and on time, avoid delays or rejection. The third one is posting. Properly allocate each payment to its corresponding line item, allowing clear tracking for the payment trend. The fourth one is collection. The structural collection process ensure healthcare providers receive the payment they deserve. The fifth one is patient services. Provide post-care support to improve patient management and satisfaction. This process helps to ensure that Healthcare provides the maintain a smooth financial workflow, minimizing delays and errors in the payment process. Investment portfolio. Beyond the cooperation, Healthcare Connect Private Limited has made strategic investment to strengthen its financial position. The company has investment in the 20 companies listed on the Colombo Stock Exchange. Some of the key investments include Capruco Holding, Browns and Company PLC, Hemas Holding, LOLC Holding, Softlogic Holding, Royal Ceramic Lanka PLC. These investments provide financial stability and ensure sustainable growth by diversifying income sources beyond its primary operations. Next, we will outline our time budget. This slide details the timeline for the various audit activities for the initial planning to assurance for the audited financial statement. Key date including at the start of the planning on April 19, 2024 and the final partner review on October 20, 2024. Firstly, 19th of April 2024 starting the planning and the other initial audit procedures. 25th of April 2024 starting the substantive procedures, test of detail and test of control. 28th of May 2024 expected finalized date of the planning. 25th August 2024 finalize the substantive procedures. This is included for P&L item and balance sheet item. 1st September 2024 balance confirmed for the tax. First partner review, this is included. After finalized tax computation. The 5th October 2024 final partner review, and finally 20th of October 2024 issue the audited FS for the management signature. This is the time budget for this audit procedures.
Audit Risk Model. Risk assessment based on the Sri Lankan Audit Standard 350. This equation highlights the key components of the audit risks. Inherent risks. The risks that material misstatement existing in the financial statements before the considering the internal controls. Control risks. The risks that the company's internal control fail to prevent or deduct the material misstatements. Deduction risks. The risks that the auditors fail to deduct the material misstatement during their procedures. To minimize the overall the audit risks, the auditor access and the test of control while adjusting their procedures to reduce the reduction risks. A strong control the environment can lower control risks, but if inherent risks high, auditors must perform the more extensive the testing more ensure occurrence. The global is the keep auditor risks at an acceptable lower level to the provide the reasonable assurance that financial statements are free from material misstatements. Business financial system overview. As well, organization financial system ensures smooth operational and the accountability. The key components include revenue system, track the sales and the income generating, ensuring the accurate invoicing and the timely collections. Receipt system, record the payment received from the customer, issuing the receipt as the proof transaction. Purchase system, manages procurement from the placing order to receiving the goods and the verify invoicing. Payment system, handle outgoing payment to supply, ensuring timely. Payroll system, manages employee the salary, tax deduction and the benefit to ensuring compliance and timely payments. This slide will explain the structure of the system. First one is the system node. Secondly, create the flowchart and can be used these symbols. Third one, control map. What could go wrong? Identify the risks in the system and the potential failures. Fourth one is the walkthrough. Step-by-step review of the system ensure the accuracy. Fifth one of the test of control. Evaluate the whether control are the functioning effectively. Sixth one is the cutoff. Ensure the transactions are the recording in the correct period. By structuring system properly and using flowchart, business can improve efficiency, reduce the risks and strengthen internal control for the smooth operations. Next, Rasita will explain in planning materiality.
Now I am discussed as the planning materiality. This is the most important part of the audit procedure. Material mainly divided as the two parts, PMT and CRA. CRA is mean as the combined risk assessment. Planning materiality mainly divided as the three categories: planning materiality, tolerable error, and SAT. Combined risk assessment is mainly based as the scopes of the audit. I will be explanation for the process of the determine the planning materiality PM. Determine the PM is the matter of the professional judgment influenced by the most relevant financial statement measure. The measurement base can be categorized into the three main areas: earning based measurement margin, including pre-tax, EBIT, EBITDA, and gross margin; activity based measure such as revenue, operating expenses; capital based measure including equity and asset. TE is defined as the application of planning materiality at the individual accounts or balance level. The document emphasizes that the planning the audit solves and detect individual material misstatement can be insufficient because of the aggregate and immediately mismanagement can be still material misstatement for the financial statement. It also states that T is set to the reduce the profitability that the aggregate to uncorrected and undetected mismanagement exceed performance materiality PM. The determination T is impact account identified as a significant. Sample sizes. The starting point for the identifying key item and the setting testing the scope and threshold. The starting point for the determining the various threshold when performing substantive analytical procedures. The document for the explanation that the T is rises. The risk is undetected mismanagement also increases. Therefore, it is crucial to set as a T as an amount that recognized as the explanation of mismanagement, including potential undetected one as approximately designed audit procedures. T is a typically set as either as the 50% or 75% of the PM the based on the factor like history of the misstatement. The auditor's ability to access to the likelihood of the misstatement, the effectiveness of the internal control, and other factors affecting the entity and its financial reporting. SAD is a nominal amount is a threshold below which misstatement, where the individual who accumulated are considered immediate and financial statement. Amount below this threshold are deemed trivial and are not included in the overall evaluation of misstatement. This concept is used for establish the level of acceptable errors or variation in financial reporting, ensuring that only significant misstatements are addressed. Next, I will discuss as to how to calculate the planning materiality. First one, selection of the basis. Selection of the basis is mainly divided as three categories: earning based, activity based, and capital based. Earning based is mainly focused as pre-tax income, normalized earning, EBIT, EBITDA, and gross margin. Activity based mainly defined as revenue, operating expenses. Capital based main divided as equity and asset. Next, I will discuss as the characteristic for the entity. Mainly divided as profit oriented or not profit oriented. It's a profitable, break even or loss making. As the mature or startup, consider industry, financing, and other characters. Next one is the selection criteria for the high end or low end for the range. It may be defined as a number of shareholders, trade debt or convert, like to go public in 2 or 3 years, change in business environment, external financing, and these items. Financial range mainly recognized as low end and high end. Finally, we discuss as the selection for the range. Selection for the range is mainly defined as a measurement base. Measurement base recognized as a normal range. Next, I will discuss as a CRA. CRA is a combined risk assessment, risk of material management. CRA is mainly divided as the two parts: inherent risk and control risk. Inherent risk is measured by a fraud and error and business errors and statement implication. Control is defined as rely on control or not rely on control. Inherent risk. Inherent risk is the meaning of the we assess the inherent risk for the each relevant assertion the based on the information we gather as the part of our planning procedures, performance of the day and the knowledge and experience obtained from the previous year engagement with the client if available. Control risk is we assess the control risk for the each relevant assertion for the each significant account and disclosure by the evaluate the effective of the control of the design and operation for the individual controls. In the relevant assertion, professional judgment is the most important thing. Professional judgment is sometimes inherent risk is lower, sometimes inherent risk is high. We consider the factor in the above diagram and the use for the professional judgment is making our inherent risk assessment for the each relevant assertion in decline whether to access the inherent risk as either higher or lower. We consider whether we identify the inherent risk factors that cause us to believe there is a higher likelihood that the measure mismanagement could occur. If we believe there is a higher likelihood that a material misstatement could occur, we assess the inherent risk for the relevant assertion as higher. If we identify the risk factor cause we as a believe that is a less likely that the material mismanagement could occur, the assume the control we assess the inherent risk is low. In this table, mainly identify as control risk assessment and inherent risk assessment. In some time rely on control is lower, the CRA is a minimum. In some time rely on control is higher, the CRA is a lower. In the sometimes the not rely on control is lower, control risk assessment is a moderate. In some time not rely on control is higher, risk assessment is high. In the special times rely on control or not rely on control is not considered, the risk control risk assessment and inherent risk we identify as a special audit consideration. These are the main features for the audit planning, PMT and combined risk assessment.
Let's discuss the main assertions of the comprehensive income statement. First one is occurrence. Ensures that all reported transactions actually occurred during the period. It verifies that they valid and relevant to the organization. Second one is completeness. Ensures that no income or expenditure is omitted. This gives complete and accurate picture of financial performance. Third one is measurement. Focuses on occurrence, calculation and valuation of transaction. It ensures that the amount of money is in accordance with the accounting standards. And final one is presentation and disclosure. Ensure transparent reporting by clearly presenting and accurately disclosing all information as per accounting standards. So next Opara will explain the key assertions in the statement of financial position.
We will discuss audit assurances and their critical role in ensuring the reliability of the financial position statement, also known as balance sheet. These assurances made by management are what auditors take to verify the accuracy of the reported balances. First, we have completeness. These the assertions ensure all assets, liabilities, and equity that should be recorded that actually included the financial statement. For example, auditors verify that all liabilities such as a loan and accounts payables are recorded in the balance sheet. This is critical because and omissions could mislead stakeholders about companies' financial position. Auditors often create documents like a supply invoice or contract to ensure all relevant items are captured. Moving on the second one, this is assertions confirm that the items recorded in the financial position actually exist. For example, if the balance sheet shows 502 million the property plant and equipment, the auditors will physically verify the company. Similarly, the cash balances are confirmed with the bank statement. This ensures the companies isn't overstarting these assets or reporting items it doesn't own. The third assertion is the valuation. The check is balances are recorded at the correct amounts and comply with the applicable accounting standard. Stakeholder receivables and example. The auditors ensure that is a reported rate of the any provisions of doubtful debts reflecting the true collectible amount. This helps stakeholders understand the real value of the company asset. Moving on the right and obligations, this is assertion ensure the company owns the asset reported and it's responsible of the liabilities state the state. For example, if land of the listed on the balance sheet, auditors check ownership documents to verify company holds the legal. Similarly, the liabilities, the confirm the company has obligation to repay the debit record. This is assertion protect against mispresentation of the ownership responsibilities. Finally, we have presentation disclose. We ensure the balances are the clarified, correct, and that all necessary disclosures are made in the finance statement.
Then we can move to the section breakdown, and the main section is the revenue. Revenue is identified from statements of comprehensive income out of financial statements. The key risk driver of Health Recon Connect Private Limited is the revenue, and the relevant standard is SLFRS 15, revenue from contract with customers. And the revenue is recognized when the risk and rewards are passed to the customer. Then we can identify the revenue five-step model that will apply to revenue arising from contract with customers. The first one is to identify the contract with customers. Second one is to identify the performance obligation in the contract. Third one is to determine the transaction price. Fourth one is to allocate the transaction price to the obligation. And the last one is recognized as revenue when each performance obligation is satisfied. Utilizing working papers to systematically verify revenue transactions, ensuring accuracy through documented customer details, invoice validation, transaction amounts, and acceptance confirmation. Working paper include customer name, invoice number, amount, designation of the customer, and finally whether the customer accepts goods or not. Four audit assertions can be identified under revenue from contract with customers. The first one is an occurrence, which means the auditor should assess whether the revenue recognized corresponded to actual sales transactions that occurred in the reported period or not. The second one is completeness. This assertion ensures that all revenue items for the period are recorded in the statement of comprehensive income. The third assertion is the measurement, that means other operating income such as interest income and dividend income is recorded under other income in the statement of comprehensive income. Another assertion is presentation and disclosure. That means is other income amounts are classified in the financial statement and it is disclosure under the notes to the financial statement. Audit assertions are needed to meet the audit objectives. Next, Francesca will explain primary substantive procedures applicable for cost of sales.
Thank you, Nirmita. Let's discuss about the cost of sales. These are the analyzed details of cost of sales from the financial statement of Healthcon Connect Private Limited for the year 2022 and 2023. First of all, we can have a figure comparison between year 2022 and 2023. Cost of sales for year 2022 amounting to 1.3 billion and year 2024 amounting to 1.4 million. So if it's as a percentage would be 7.49. Let's discuss what are the reasons behind these differences. There are several attributes for these differences. The main reason would be staff salaries and allowances. There was an increase staff salaries allowances from 1.05 million to 1.13 million in 2023. Then as a second point, we can get overtime. Overtime expenses are decreased slightly from 30 millions to 25 millions. Then we can get EPF and ETF contribution. Both EPF and ETF contribution are increased, reflecting to the higher staff cost. And as the fourth point, we can get the staff bonuses. We can also see increase from 55 millions to 58 millions for the staff bonuses, and we can get leave encashment. There was an increase in leave encashment expenses from 2.1 millions to 5.7 millions. And also we can get depreciation. Depreciation expenses are increased from 34 millions to 38 millions. So we can have a overall what are the overall impacted key point for these differences. First one is increased operational cost. The rise in cost of sales indicate higher operational expenses, particularly related to staff compensation. This include salaries, allowances, bonuses, and contributions to provident and trust fund. As a second point, we can get investment and human resources. The company appears to have invested in more its workforce, which could be strategic move to enhance the productivity, retain talented, or expand operations. As the third point, we can get stable gratitude and depreciation. While gratitude expenses are remained stable, depreciation costs increased slightly, reflecting to ongoing investment in property, plant, and equipment. As conclusion of cost of sales comparison, the increases in cost of sales is primarily driven by the staff related expenses. This suggests to Healthcon Connect Private Limited is invest in its human resources, which could be benefit in long term growth and the stability and the sustainability of the company. However, it also highlights that the management carefully need to look at their operational cost to ensure the continued profitability. So this is the overall look about the cost of sales. So over to you, Rashida.
I will discuss the primary substantive procedures applicable for cost and expense accounts, which play a crucial role in verifying the accuracy and completeness of financial information. These procedures help ensure the expenses are properly recorded, classified, and supported by appropriate documents. Let's go through them and in detail. Administration expenses. Administration expenses include costs related to this general operation and business, such as salaries, office supplies, and legal fees. To ensure accuracy, we follow three key substantive procedures: reviewing the content of administration and other expenses. We examine the nature of classification of these expenses to confirm their legitimacy and ensure these properly categorized and financial statements. Reviewing underlying documents. This involves checking invoices, contracts, and other supporting documents to verify the authenticity and correctness of recorded expenses. Completeness of lawyer confirmation. Since legal expenses are claimed in live financial implications, we confirm with legal counsel whether all related costs and contingent liabilities have been properly recorded.
In the audit process, analyzing selling and distribution expenses is critical, as these expenses directly impact an entity's operational performance and profitability. These include costs like advertising, fitting, and promotional expenses which need to be audited carefully to ensure their accuracy and validity. Using vouching and verification method, we start by comparing these expenses with prior period to identify major changes, unusual transaction, or the absence of expected verification. For example, a significant increase in advertising cost in vouch to contract and invoice ensuring its authenticity. This supports the occurrence assertion comparing that recorded transaction genuinely happened. The completeness assertion ensures no expenses have been omitted, guaranteeing the financial statement reflect all selling and distribution expenses. We verify mount to validate the measurement assertion, ensuring figures match sources document like purchases, order and invoices. Additionally, we verify if these expenses are appropriately classified and disclosed under the presentation and disclosure assertion according to financial report standards. By throughoutly applying these assertions, we enhance the reliability of financial statement and uphold stakeholder confidence in the entity financial integrity. Next, Chamodi will explain financial position in property, plant and equipment.
Property, plant and equipment. Under LKX 16, property, plant and equipment are defined as tangible assets that are held by an entity for use in the production or supply of goods or services for rental to others or administration purposes, are expected to the using during more than one period. Measurement of PPE. PPE measured at two stages. At recognition, initially recorded at cost. After recognition, measured using either cost model or revaluation model. Depreciation of PPE. The depreciation method should reflect the pattern in which the asset future economic benefits are expected to the consume. The two common use methods are straight line method. Equal depreciation is charged each year. Reducing balance method. Higher depreciation charges in the earlier years, decreasing over time. In the organization, depreciation is calculated using straight line method for all PPE. The asset residual value, useful lives and depreciation methods are reviewed annually and adjusted prospectively if necessary. Audit accession and procedures for PPE. First one, existence. Transfer the PPE balance from the balance sheet to the fixed assets register. Verify that the asset physically exists and or in working condition. Second one, completeness. Ensure all PPE owned by the company is recorded in the financial statement. Conduct physical verification of all or selected significant asset. Investigating and resolve the discrepancies between physical count and the fixed asset register. Third one, right and obligations. Confirm that the company owned the recorded PPE items. Sample selection. Selected item from the PPE register for detailed review. Third one, valuation. Verify the PPE is recorded at the appropriate cost of valuation. Ensure discrepancies is calculated in completeness with LKS 16 and consistent with the organization policy. Fourth one, presentation and disclosure. Ensure all proper qualification of PPE in the financial statement. Next, Kavisha will explain receivables.
Trade and other receivables are vital components of company's financial statement and must be audited with precision to ensure accuracy and reliability. During an audit, we use verification and vouching methods to test the validity of these receivables. Verification involves examining documents such as account statement, contracts, and payment records to confirm that receivables exist and are properly recorded. Vouching, on the other hand, tracks recorded receivable back to original document like invoice and delivery receipt to confirm their authenticity. Audit assertion guide this process. For existence by inquiry, we ensure receivables are not overstated. By inquiring with management and sales team about transaction without billing. The completeness assertion ensures no receivables are omitted by reviewing evidence for large accounts and creditworthiness. Under valuation, we verify if the receivables are accurately recorded by testing revenue recognition and assessing year-end estimated. Lastly, presentation and disclosure ensure proper classification and that all significant details like related party transaction are disclosed in the financial statement. By applying this method and addressing assertion at auditing help maintain the credibility of financial information and ensuring stakeholders can rely on the reports. Next, Hansika will explain related party transaction.
Amount due to related party. Amount due to related party refers to any outstanding financial balance owing to the entity being audited by a related party, such as subsidiaries, affiliated, or key management personnel. This amount can represent loans, receivables, or any other financial transactions. Auditors assess this amount to ensure they are accurately report, properly disclose, and comply with applicable accounting standards and regulation. Firstly, existence. Agreed the opening balance to the last year adjusted financial statement and closing balance to the trial balance. Secondly, completeness. Search for unrecorded payables or accruals. Search for unrecorded payable receivables from related party transaction. Examples related to employees, rents, license, sales, royalties, dividends, service and received. Thirdly, right and obligation. Call for confirmation and review confirmation to the ensure that appropriate payables accruals have been recorded by the client. Finally, presentation and disclosure. Verification of intercompany account balance obligation, a complete list of affiliate companies and obtain confirmation of receivables from payables to affiliate or agree to the account balances with those in the affiliate recorded. Next, explain Apsara cash and cash equivalents.
Let's discuss the key assertions of cash and cash equivalents. First one is existence. All cash on the balance sheet is provided by the entity itself or by other external parties. Second one is completeness. At the balance sheet date, all cash held by the entity is included in the balance sheet. Third one is rights and obligations. The entity has a legal right to all the cash on the balance sheet at the balance sheet date. And final one is presentation and disclosure. Cash are properly classified, described and disclosed in the financial statements in accordance with the applicable financial reporting framework. Next, Hansika will explain about advance and prepayments.
Advance and prepayment. In auditing, advance refers to payment made before receiving goods or services. Auditors verify that advances are properly recorded as asset and are supported by valid agreement or documents. Prepayment. Prepayment refers to payment made for future expenses. Auditors ensure prepayment are correctly classified as asset and are amortized over the period they apply to matching the expenses with the benefit received. Reviewing supporting document when it is present physically to ensure the existence valuation of the balance. Review the subsequent settlement and the year-ended balance.
Capital represents the funds of company raised through share issuance. It included ordinary and preference shares are and is legally recorded in the finance statement. To ensure the accuracy in the important to review in the share capital amount for any unusual transaction and verify the changes such as new issuance of the buybacks have been properly authorized in the board minutes. On the hand, retained earnings refers to accumulated profit company keeps after distributing dividends. This account reflects the company's ability to reinvest its business. The review process in, involves checking an unexpected adjustment to correct profit entries and ensuring the dividend declared aligned with board approvals. In conclusion, regularly reviewing both state capitals and retained earnings the essential for maintaining financial accuracy, regulatory compliance, and transparency. By checking ledger recorded and the board means and businesses can upload it financial integrity and avoided errors of unauthorized transaction. Now we can move on to gratuity. Apsara will explain this.
Let's discuss the key assertions of retirement benefits obligations. First one is existence. Review the extraction of opening and closing balances. Second one is completeness. Compare that account balances with those of prior periods and investigate any unexpected changes. Third one is valuation. Pension and other employee-related long-term reserve examine the composition and computation of pension and other employee-related long-term reserves for reasonableness and consider the use of specialists. Final one is presentation and disclosure. Pension expenses takes correctness of journal entries in connection with pension and post-retirement expenses, current payments, and for changes in pension reserves. So, next Roshita will explain about interest-bearing loans and borrowings.
Audit consideration. When dealing with these financial obligations, we must ensure accuracy and compliance. This process involves key areas. Existence. We verify that long-term debt and interest calculation prepared by the client reasonable. This ensures that liability report truly exists. Completeness. Reviewing payment made throughout the year helps to confirm that all financial obligations have been properly recorded. Written obligations. It is crucial to assess whether interest expenses align with contractual agreements, ensuring legal and financial compliance. Presentation and disclosure. Finally, independent calculation help assess the impact of foreign exchange fluctuations, ensuring the transparency of financial reporting. By following these steps, we enhance the reliability of financial statement and ensure the interest-bearing loans and borrowing are correctly accounted for.
As auditor, verifying and vouching trade and other payables, ensuring the accuracy of financial statement. We apply an audit assertion, existence, completeness, right and obligation and presentation and disclose to detect misstatement and fraud. First, we verify trade payables by auditing balance sheet records against supplier statement confirming their existence as real debt for goods and services received. Then we vouch invoice, purchase orders, and payment record to ensure completeness, making sure all liabilities are recorded. For right and obligation, we audit contracts and security interests confirming their entity obligations. Lastly, we examine financial statement for proper presentation and disclose in compliance with reporting framework. Using bucket analysis, we categorize payable by again and risk level. If a supplier balance is missing in records, we trace it using the URL review, ensuring no hidden liabilities. Through these audit proceeds, we ensure transparency, accountability, and fair reporting in financial audits. Next, Francisca will explain income tax payable.
Thank you, Kavisha. First, we look at overview of the HealthCon Connect Private Limited, focusing on the tax-related aspect based on the financial statement for year ended in 31st March 2023. HealthCon Connect Private Limited is a limited liability company incorporated and doing operations in Sri Lanka. So basically, it's a residence company in Sri Lanka. When it comes to tax compliances, HealthCon Private Limited companies with the Sri Lankan accounting standards and the requirements of the Companies Act number 7 of 2007. The company follows guidelines set by the Inland Revenue Department, Act number 24 of the 2017 tax calculation and deductions. Then as a second topic, we have the tax credit and allowances. Company entitled to additional deduction when calculating its income from the businesses. This deduction equal to 35% of the total amount deducted for the year under IRD Act, representing the payments made by the company that are included calculating the tax income of its employees, but it exclude the company directors. As third point, we have the tax provision and a deferred tax. This company report the current income tax expenses of the year 31st March 2023 would be 3.5 millions. The company recognized deferred tax asset for the unused tax losses when it likely that future profit will be sufficient to these losses. Then we have the VAT and SVAT. The company has a value added tax recoverable amounting to 3.8 million, and the SVAT would be SVAT amounting to 1.7 million. These amounts are included under tax recoverable in the financial statements, and they are also an income tax receivable amount 600,000. Then we have the tax liabilities and the payments. The company has an income tax payment amount of 1.9 million. The financial statement also shows accrued expenses which including tax related liabilities. And I would like to add some another points like tax exemptions. This company has tax exemption for foreign tax exemption is foreign currency exemption, which means the gains and the profit from the service they provided in or outside in Sri Lanka, if paid in foreign currency and sent through a commercial bank to Sri Lanka after 1st of January 2020, it would be exempt from the income tax. So this tax benefit have this company. In conclusion, HealthCon Connect Private Limited demonstrate a strong commitment to tax compliances and efficient management of tax credit allowances and liabilities. This approach is not only ensure the regulatory requirement but also support the company financial stability and growth.
In conclusion, the presentation on auditing and the operational practices, the focus on the audit planning, risk assessment and the substantive procedures for the auditing the company. The cover to the engagement team, the company structure, audit timelines, and the different control types such as preventive, detective, and corrective controls. The audit risk model and the Sri Lanka Audit Standard 350 guide risk assessment. The key topics include the significant control transactions related to revenue, purchases, payment, and payroll. The system structure of Health Recon Connect Private Limited is analyzed, including flowcharts and data storage method. The planning materiality, fraud risk, and the business errors are assessed using a combined risk assessment approach. The financial statement assertions, particularly revenue recognition (SLFRS 15), are discussed through the 5-step model. Substantive procedures for cost, expenses, asset, and liabilities are detailed, along with the tax compliance aspect. The presentation included the audit procedures for gathering the sufficient and appropriate evidence to finalize the audit. Thank you for your attention.